What's going on? So guys, I'll teach you the basics of trading volatility. It's very simple. If you listen to what I'm saying, you will understand what you're supposed to do, right? So what you want to do, you're going to start on the 24, which is the daily time frame. You're going to mark your lowest point and your highest point. As soon as you're done, you're going to scale down to the 4 hour, right? This is the most simplest I can ever explain, right? So as soon as you buy the 4 hour, remember on your daily time frame, you had plotted the highest point, which is your resistance, and your lowest point, which was your demand, right, or support. So as soon as you're done doing that, you go to the 4 hour. As soon as you buy the 4 hour, you're gonna mark your point where there was a strong rejection, right? So your swing highs and swing lows. So this is one example. This is a point where the market had rejected, right, on your 4 hour. I'll just zoom in so you guys can see. Very simple. So don't forget this resistance, right, from your daily time frame. Very important. So when you're here on your 4 hour, this was your swing high. So this was your basically your high, your lower high, lower low, lower high, lower low. So it's basically creating a downtrend. So what you want to do is capitalize on your resistance and support zones. So this is one resistance zone, right? So the market created a sharp move down and then it corrected. This correction made it create what? A double top. So this is one example. The first touch happened, came back again, the second touch. So this is where you plot your line. You come back. Now we want to look at the current price. What is actually happening here? So what I'll do from the 4 hour, I'll mark my high. Right? This was the high that happened. Right? So the market came, retested this point, came back down, came back again. So I'm saying, okay, this is my area of interest. So I'm gonna mark this area right here. So I'm saying that if the market happens to come back here, I'll definitely be looking for a rejection. Right? So that's one point. Another one is this one. This one is my current low. Remember, this is the current market price. So this is the current low. So I mark the current low and the current high because I want to see what's actually happening in real time. Then I'll skate down to the 1 hour. Yeah? As soon as I'm by the 1 hour, I already understand that obviously I'm in a channel, right? This is a channel, this is a downtrend. Remember what I said? It's creating lower lows, lower highs, lower lows, lower highs. Anytime it creates lower lows, lower highs, always look for selling opportunities. It doesn't matter if the market detests or whatever the case may be. But on these swing highs, meaning your resistance zone, your support zone, this is your current resistance zone, you are making sure that you want to wait for the market to come back to either one of these lines, which is where you're going to be capitalizing on your selling opportunities, right? So this was my previous high, right? As soon as it came back, it retested here. This is where I would have entered my gain, my short, right? To capitalize this here. Came back again. This is where I'll be looking to what capitalize for my short, for me to what continue moving down. As soon as I'm done doing that, I go down to 30 minutes. Guys, just go back to this video. Try to understand what I'm trying to say. Daily, you mark your highest and lowest point. 4 hour, you mark your swing highs and swing lows. 1 hour, you look at the trend, looking for more selling opportunities if you're in a downtrend, looking for buying opportunities if you're in uptrend. So all of these points, which are lines of sensitivity, this is where we are looking to capitalize from, right? So from here. So I'll be waiting for the market to come back to this point where I'll be capitalizing for those selling opportunities, or I'll wait for it to break this support zone, right, for me to capitalize for the retest and selling opportunities. I also want you guys to look at something, right? So when you go down to your 15 minutes, this is where you are able to see what's actually happening, right? Remember I said we're looking for majority selling opportunities. So if I drew my trend line from there going down, I would have seen that this would have been a trend line where I would have capitalized for more selling opportunities. So initially I should have actually entered within here, right, and targeted this low. So remember, with volatility, guys, you need to make sure that whenever you're trading, you do not hold for a very long time. It's all about you capitalizing and going out. That's the basics of volatility, right? If you do hold it, make sure that you trade with a very small lot size, like your 0.5 or your 1 lot size. Don't capitalize on it don't hold for too long, right? So here, this is where I'll show you that the market has been trending up. This is where I capitalize for my selling opportunities. that retest, that in correction, down, correction, down. So it's telling you that I actually want to go down. So the more it goes up is for you to capitalize. Make sure that you're always looking at your double bottom, double top, triple bottom, triple top. Volatility, it's all about you finding patterns that you can trade consistently, meaning that you need to find one pattern that you see that it works and then just capitalize on that. Always wait for that pattern to occur in the market. For me, it's a trend line break. Every time there's a trend line break on volatility, it always breaks out and then comes back for that minor resistance or support zone or retest, whatever, and then it continues that initial direction. Take for instance, this market was trending up, right, on the 5 minutes. It was trending up, creating the higher highs, high lows, highs, whatever the case may be. But as soon as it came to this point, it failed to go higher. So what is this point telling me? It's telling me that from here, I cannot go any higher. So whenever the market comes back to this point, look for shorts, sell me. So as soon as it broke out of this trend, this would have been an opportunity for me to continue selling, right? Then it came back again within this point. So what is it saying? It's saying, guys, I've failed to break this point right here, and I'm still failing. Even if I come back more, I will still fail. So look forward those selling opportunities. We already saw the trend from the 1 hour time frame, right? 1 hour, we can clearly see the market is going down just from this point right here. So it was that down strong movement, that correction down, it kept going down. So why would you wanna capitalize on buys when the market is selling currently? Right, we haven't found a strong resistance zone or strong support zone within this point, so automatically we think we are still going down. So that's me just explaining the basics of how to trade volatility. I'll try to upload more videos where I teach you guys for free. I don't want to be charging, or I'm not promoting any broker. I do this because I want to teach you guys and I want you to see the market in a different light, right? So make sure that you guys like, comment on this video, share, and let me know if you guys enjoy for part 2. Thank you.